So hello and welcome. Welcome. I am Nikhil Prashad Singh, a crypto lawyer at SecuredApp, and today we are breaking down the Genius Act, the United States landmark stablecoin law. So it has been passed by the Congress and in mid 2025 signed by the President Trump. So this is the first major federal regulation on digital assets. It creates a detailed regulatory framework for payment stablecoins and cryptocurrencies pegged with 1:1 to the safe assets like US dollar. Now, what is stablecoins? So, stablecoins are cryptocurrencies whose value is backed by the low risk assets like national currency or treasury bonds to keep their price steady. They are widely used for cryptocurrencies and have grown rapidly. And in fact, global stablecoin transaction volume in 2024 was reported to exceed that of Visa and MasterCard combined. And until now, US law had no clear rules for them. The Genius Act, officially which is known as the Guiding and Establishing National Innovation for US Stablecoins Act, changes that. It spells out who can issue stablecoins, how they must back them with the real assets, and how regulators oversee them. So as we go through the act, note that it is part of a global wave of stablecoin rules. So let's not wait and move further. So what does the Genius Act does? The Genius Act sets strict requirements for stablecoins and creates new regulated entities. And broadly, it restricts issuers, it mandates 1:1 of 1:1 backing, it requires transparency and audits, enforces anti-fraud law, it bars yield and deceptive marketing, and it sets out consumer priorities in collapse. Importantly, the Act carves a stablecoin out of the securities and commodities law. A permitted payment stablecoin is not treated as security under US law or a commodity under the CFTC. So whether the ACC or CFTC directly regulates it, instead of Stablecoin Act get their own home regulators, banks and the office of the comptroller of the currency. Now, why it matters? So, what does the Genius Act achieve? In essence, it brings out the clarity and stability to the US stablecoin market. By defining clear rules, it removes legal uncertainty that has lingered. As Latham and Watkins note, that this first federal digital legislation on digital assets provides a regulatory framework for payment stablecoins, which could pave the way for the increased digital asset adoption and innovation. And industry leaders have been echoing from all sides of the world. So, what does it impact upon? So, first of all, it boosts innovation and trust. Okay, so with the strict 1:1 backing and audit, stablecoin may gain credibility among the mainstream user institutions. One further, it aligns US with the global trend. Many other countries are moving on stablecoin rules. For example, EU's MiCA and Hong Kong's new ordinance both require strong collateral and licensing. The Genius Act keeps the US competitive. By joining this effort, Economic Times note that US passage comes as the UK, Singapore, and Japan move ahead with the structured crypto rules, meaning clarity in the US helps America compete with the global digital economy. And further, it clarifies the laws for businesses. By carving out stablecoins or security laws, the Act tells banks and fintech on how they can legally issue or handle these coins. For example, any major fintech, any major bank and fintechs, how they can legally issue or handle these coins. For example, any major company wanting to launch a stablecoin will need federal approval. Okay, and further, it protects users and impacts stablecoin types. Okay, so in sense, requiring full reserves and audits is a consumer protection. Your USDC or USDT wallet by law be backed dollar or dollar by cash or treasuries, plus holders get priority in issuers bankruptcy. So for India and other countries watching, the Genius Act is a sign of how mature economies approach crypto. While India has not legalized private stablecoins, the global ripple effect matters. US rules will influence international banks, cross-border trade, and possibly inspire Indian regulators to clarify their instance on the crypto payments. And now, due to so much wide arrays, it has drawn some criticisms and concerns as well. So first of all, no law is perfect, and experts have flagged issues with the Genius Act. Some key critics include insufficient consumer protection. The consumer groups argue that the act doesn't do enough for everyday users. Okay, so consumer reports, for instance, warned that it allows tech firms to act like bank without full bank regulation. Further, there is a banking system risks. A big worry is what happens if everyone rushes to redeem. Economist Barry Eichengreen warns that if panicked, holders force issuers to dump all their government bond reserves, it could destabilize US Treasury market. Further, there are ethical and political concerns as well, and there is a global coordination as well needed, because regulators note that the crypto is global, so one country law isn't enough to regulate for the regulators. So while this doesn't change the law's text, it has fueled debate about whether big crypto interest got too much influence. Okay, so what is the road ahead? So with the law signed, the next step is rulemaking. Federal agencies and states will spend the coming months drafting the detailed regulation mandated by the Act. These will cover capital requirements, liquidity management, information security standards, and more. Further, large stablecoin issues will have to start publishing audited financial statement and will cover issuers must comply when the act becomes the effective. So, so if you like the video, please share and subscribe with your friends and colleagues, and please wait for further videos when we come. Okay, thank you.